Picture this, you and another business owner both apply for business funding. Same credit score, same bank, same business credit application. But you get denied and they get approved for a $25,000 limit. And the craziest part is, it's not even your credit that's holding you back. The bank already made the decision before you even submitted the application. It may not seem fair, but you gotta understand this if you wanna access capital for your business. So in this video, I'm gonna give you the 3 things that are keeping you from getting approved for business funding, even though you have a good credit score. First off, lenders simply don't trust you. I mean, if some random person just came up to you and asked you for money, you would definitely say no. Even if a few people that you checked with told you that they were good for it, you would still be a little skeptical, as you should be. You probably feel a lot more comfortable lending them money if you already knew them and did a little business with them before. And banks are thinking the same exact way about you. The first reason lenders are denying you business funding is because the relationship isn't strong enough. These lenders want to see that you've been part of their ecosystem and that you're utilizing other products before you just come asking for money. These other products can include personal checking and savings accounts, direct deposits, business accounts, and just consistently doing transactions with them over time. Now, not every lender is going to require all of these, and some don't require any. But if you're unsure about your approval odds, the stronger the relationship, the better. And another way that you can strengthen your relationship with a bank or a lender is to build real life connections with them. This is something that I've been able to do at multiple banks just by going in and having good conversations and rapport with the business bankers. Now, when I refer someone to one of my relationship managers, it's just a much easier process. And a lot of times they go through a manual approval process, which comes with much higher limits. But even being tight with the bank can't help you if you're making this next mistake when it comes to getting business funding. Over 90% of businesses that I work with have had some type of error or flaw when it comes to their business setup. And that's understandable because as small business owners, a lot of times when we go form these businesses and LLCs, we either do them ourselves or we just get someone we know to do them for us. And we do this without really considering how it could impact our chances at getting approved for funding in the future. When you apply for business funding, these lenders are going to check every piece of information that you put on that application. This includes your business documentation like articles of incorporation and EIN number, your business address, your business phone number. And I was literally just meeting with my Chase relationship manager the other day, and she definitely asked about my business website. So those are just a few things to consider. When you combine all of those fundamental pieces, it creates what I call your business structure. Your structure is how you show lenders that this is a legit business and not just a hobby with an LLC attached to it. So when these lenders Google your business name, do they see an actual building? When they call your business, is it your personal phone number? And think about it, every real business that you've spent good money with definitely has a website, right? These are questions on business funding applications that can be the difference between you getting approved and denied. But thankfully, I'm gonna give you a few ways here to still ensure that your business is structured as professionally as possible. If you don't have a physical location with like a brick and mortar business, you can use a virtual office provider like Regus. Companies like Regus have big corporate buildings that will allow you to use their address and they'll actually collect mail on your behalf. If you don't have an additional line for your business phone number, you can use a service like Grasshopper where they'll actually provide you like a 1-800 toll-free number. This looks super professional when businesses go call you. And if you don't have a website, you can easily go ahead and buy a domain from GoDaddy and then get a small one-page website built on a website provider like Wix. All this one-page website needs is your name, address, phone number, and a small description of what you do. I would also brand it with elements like your logo and color as well. All in all, these few steps will make your business look more professional and legit than 95% of other businesses out there. And it's going to give you a level of professionalism to where lenders are now going to take your company serious. But even if you dot all your I's and cross your T's, making this next mistake will definitely result in you still getting denied. And that's because these lenders have built-in red flag systems that automatically trigger denials. And one of the biggest red flags is in regard to your business type. Certain businesses are considered high risk for lenders to loan to, which means if your business is or even sounds like one of these high risk industries, you're either going to get automatically denied denied or get a much lower credit limit than you would normally. So to break it down, you do have more traditional high-risk industries like gambling, tobacco, marijuana, OnlyFans related type stuff. But you also have to consider that there are more internal, less talked about high-risk industries as well. These industries can include car rentals, trucking, and real estate investing, just to name a few. Lenders consider these volatile industries where businesses have a high failure rate. So there are certain places in your business setup where you can avoid triggering high-risk red flags. The first place is going to be in your business description. So you want to make sure throughout all your business documentation, you're not stating that you do any business in any of these high-risk industries. The second factor is going to be your NAICS code. This is a 6-digit code that classifies your business based on the product or service you provide. And this can pop up in a few different places depending on the state of your formation or the lender that you're working with. Another high-risk indicator is going to be in your business name. You want to make sure that you don't describe your business activity in your business name. Just keep it super general. I mean, think about it. Some of the biggest companies that you know and use today, names have nothing to do with what they really do. Apple, Nike, Google, literally nothing. The theme throughout this entire strategy is to model your business after large, well-established business models that are already proven. This gives you the best chance at getting approved for a high-limit business funding, especially when you aren't making 6 to 7 figures in revenue or have the financial documentation to back it up. Now that you understand why you've been getting denied for business funding, the only thing standing between you and 6 figures of it is knowing exactly where to get it. So watch this video next where I break down my proven funding formula. I'm going to show you how to strategically secure over $250,000 in business funding step by step in less than a month. Let's get it.